Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is a Polestar Automotive, ticker symbol PSNY. And so here I am recording this on the evening of Wednesday, August 22nd, after Polestar closed on the day at a price of 85.64 cents, being up nearly 2% on the day. And so the reason why I'm going to be going over this one is because it was requested. So thank you for the comment. And, it has been a little while since I did go over the chart. I recall that, when it was in this downtrend here, I suggested that Polestar, might be digging its own grave, I think is what I said. But then it did go down a little bit further, but then it bounced. And I think I had suggested that price be coming down to 50 cents. I kind of forget. And sorry if this video is a little rough. I got work tomorrow and I've been up late today, long day, but I just wanted to get this video out for you. So if you do enjoy this, even though it's unedited for the most part, make sure you like it and share, and all of that. Thank you for the request again. But so I'm just going over this rough. We did bounce on, let's see, July 3rd, right here where this channel ends. Put out another video asking, was I wrong? And I did have some Fibonacci retracements on this, but I deleted them just because I kind of wanted to go everything fresh. It might be a little bit of a rough video, but you guys will be able to, kind of see how I analyze this rather than just doing it all prepared. So I did leave some of these lines up, one being, this gap here at 110. We hit a high on the 8th of 110. So, that gap has been filled, so that's good. I might still leave it there just because, it was clearly very much a resistance level there. Price wicked up but got rejected below. I also have 126 up here. I'm actually going to delete that one. It just seems a little bit arbitrary to me. And then, $2 up there. I think that's probably just kind of hopium at this point. But, I'll leave it up there because it does seem like it was respected over here as support. And, it did end up kind of fading out with that as being rejected here and then not being able to get up there down here. And let's see, the thing that really stands out to me, not even necessarily, I mean, the downtrending channel, but not even really this massive. Yeah, I mean, this trend line actually, was a very good level to be, buying the dip here, accumulating when, I had lost conviction and then it goes up. We came back and we didn't test that line. So I do think that is good, but I'll draw some retracements up, some levels that might offer some guidance there. But I do think that is really, really cool how these two pivot points, going back in time, I could have drawn it even from pivot point over here, but this trend line goes back to, the end of October 2022. So it does have a lot of history there. And oops. And then so this other trend line, which I find really interesting, really compelling, is based on these two pivot lows, one being the low from February 23rd of this year, and then the other one being the pivot low of April 25th. We did, bounce almost, we tested that when we did gap down, but, of course we broke when we gapped down. We did get rejected from there, so that horizontal line from that level 110, but that downtrend, that did serve as resistance over here. What is the tell, though, that this is not a bull flag? Why did this not break out? And so I would say the big tell, it's kind of tough because it did linger up there, but I think the really big tell is that there was this massive wick to the upside. And so that just suggests that there are no or not enough buyers to push the price above 110. And then following that, while we did see some consolidation, maybe it's a little bit hand wavy, so I'm not even going to draw, but it is kind of, an uptrending consolidation. But really, to me, it's just that there's this big wick up. And while there was, following that, actually, I mean, there was a wick above that open. But, the close was lower. Here, there was a close above that open. But, nothing too substantial. And really, we needed to see a close above 110. Putting that big wick up there makes me think just generally, whenever there's a big wick, whether it's to the upside or the downside, if price is not able to trade above or below, whichever perspective you're looking at on this, the upside, if price is not able to trade above that to get above that, it might be putting in a top. Just like, let's see, down here, we've got these big wicks to the downside that kind of suggests that, there aren't enough sellers to drive the price lower. People are buying it up. That's why it goes back up. Exact opposite up here. So I think that is kind of a tell in how that might be bearish. Another thing, I think it's a reversal candle. I'm not exactly sure on the terminology. I believe it's a reversal. But here on July 12th, big green candle up, going up 9.11%. But then on the 15th, so I guess that was on Friday the 12th and then Monday the 15th, then came back 6.93%. So pretty much all of those gains from that Friday were retraced. That's a reversal signal. That suggests a lot of weakness. Also with this candle over here, that's a bearish engulfing candle with that big wick up. So, there are a good amount of topping signals. And then here, this is just, consistent selling on the way down. This bear flag, then move lower. And so now, where are we at? We're at that trend line. Are we going to break out? Are we, I don't want to be bearish. I don't like being bearish all the time. I, for myself, am just trying to exercise more caution lately. I do think it's good to do that generally, just given the market conditions right now. But looking at this, let's see. The thing that stands out to me is this big green candle on the 16th. Let's see, that went up 20% on the day, so looking super awesome, but it didn't get up to that downtrend. But then on the 19th, big red candle going down over 6%, opening above and then closing below that downtrend, as well as opening above this prior high, in this uptrend here, these upward moves, opening above that high and then closing lower. Now we're getting some, kind of consolidation. These wicks do suggest that buyers are stepping in down below 83.5 cents, right around there. But that could fade. And with that being said, let's see, with the move almost, up relative to yesterday's close, it was a red candle and that price came down a little bit, but that is a dragonfly doji, potentially bullish. But I feel like I am a little bit skeptical of this because, we were trading up here and then it comes down, its efforts to go higher, it pulls back. And then the next day, it's nice that we're seeing these wicks to the downside, but it goes up and then pulls back. And so, actually, I would just keep an eye on 83.50 or 83.40 where it's at right now. I think that's a pretty important level because we haven't really seen any closes. What was the close on this day, actually? The close, 83.49. So I'd look for a close below 83.49, and that might be a fake out. Really, you just don't want to see closes below these lows. So the low on the 20th, that was 81 cents. So I would not want to see a close below that for sure, but then that's, maybe the beginning of the move. But just looking at this opening above, closing below, not being able to get back up, and following this down move, it seems like it's consolidating a little bit. So maybe that's a little bear flag. That would be my concern. But let's see, there are some retracements that we can draw that could give us an idea of levels that may or may not be acting as support and resistance. And so first, what am I going to do? I'm going to look at the possible levels of resistance. And so to do that, I'm going to go from this high here at 110 and then down to this low. To retrace to that high, you will be bumping into resistance on the way up. And so that's how I interpret these. And so, let's interpret this together. And so it does look like it got rejected from the golden pocket. That's the 618 to the 65% retracement, about 91 to 93 cents, right around there. So it does look like it got rejected from there, pulled back, and now it's trading right around the 50% retracement. That's 85.51 cents, give or take, But on the way up, it did find support, actually. I should say it found resistance at the 382 at around 80 cents, pulled back to 72.57, and then moved up. And then now it's kind of, hopefully, let's see, hopefully the 382 at right around 80 cents holds as support. But if it doesn't, like I said, the retracement is to effectively find resistance to the upside. So with that being said, I'm actually going to remove some of these levels so we're not getting distracted, thinking too much about maybe some of them are acting as support. Let's just think about them as exclusively being resistance. And so we have gone up through, all of the levels. So forget any of the ones to the downside. And so, I'm just going to omit all of those other than, that golden pocket, and then the 786 is still above us. So maybe there's something there. And let's see. I don't know if you heard it, my jaw just cracked though, pretty crazy. So I'll leave that yellow. Maybe that's kind of bold, but the next one that I'll do will be in white or maybe light blue. I've been liking them in light blue lately. I'll do a retracement from the bottom here up to the top, if that is the top. Maybe it's not, and then this is kind of like an invalid retracement, but we have pulled back, so I think it's fine because there is clearly a top here. And so I'm just going to do like a fake one, and then I will, add all of the levels back in, and then I will delete that and I'll redraw it because it's more fun when all the levels are there. Okay, 6101 up to the high. That was, is it 96 cents? That's another thing. I mean, it got rejected from just below $1. So, I mean, take that with a grain of salt. But yeah, so the retracement, maybe there's some support here. But with that being said, it could be a bear flag and then it moves to the lower levels. So like with this one, what I did with the other one, I'm just going to remove the levels that it's already surpassed. So far, it's only surpassed, the top, of course, and the 236. And so, yeah, I mean, to me, this looks like a bear flag. And yeah, I mean, I think for me at least, it's all about like I'm trying to get better at just like managing risk, managing exposure. What do I hold that I love that I never want to let go? And what stuff do I think is just like really cool? Like I think Polestar is a really cool company. I think that their vehicles are cool, but do I really want to hold that for a long time? I don't have a position in Polestar. I have a position in Neo, and I just don't want to be spread too thin in the EV space. But also with this being, I mean, it's a penny stock, which is kind of crazy because it's almost a 2 billion market cap company. With it trading below $1, though, being listed on the NASDAQ, they're probably going to have to do a reverse split, I would imagine. And the things that like really turned me off back here when they had both of these like earnings reports, because they had issues with accounting and stuff. And so I didn't like that about them. And one thing that does kind of stand out to me is maybe not being so good about Polestar. And maybe this is actually a bullish thing for you that you're excited about it. But I feel like, like Tesla has like the Model S. I don't know all of their which vehicles which exactly, but like Model S is like they're really nice car, and they have is it the Model 3 that is more accessible financially for people. They have 4 different vehicles. I guess with Cybertruck now they've got 5 different vehicles that are kind of a range of accessibility to like really luxurious, expensive, and nice to more affordable, more economical. Whereas Polestar I feel like is all just like really nice, really expensive. And so if we are, let's say, I'm not saying that we're in or that we're going to be in, but let's say we head into a recession, are people going to be buying like really nice, expensive EVs? And so, I like, what's their edge if there is a recession and people cut back on their spending? Do they have a model that's super affordable, something like that? So that's what I would think if you're like more of a fundamental investor. But I just think that yeah, I mean, like I'll extend this so I know when I did the last video, but it's still just in that trend. I mean, it's in the top of it. Maybe it breaks out, but I think it looks like it's a bear flag. I think it's going lower. And yeah, the 1618, it's, projecting into the future that would not correspond with this line here, this downtrend, but that's like 40 cents. It's probably not going to go to the 1618, but maybe maybe it could drop by 50% from its current price. So I think it's good to take it with a grain of salt. If I were to put money on this, I would put money on it going down. I'm not putting money on it. I'm just trying to exercise caution. But yeah, I mean, maybe it goes back to 110. Maybe, I guess, what if it is to go in the upward direction? What would I look for to signify that? I would look for a close above this downtrend. So I don't know if I mentioned it before, but that downtrend based on, I believe I mentioned it, the low from February 23rd, and then also the low from April 25th. I'd draw that on your chart. I'd look at that and I'd inspect to see, are we closing above that? Once we close above it, do we pull back, the day after, or do we get another close above it that's closing at a higher price than the previous day's high? That would, as far as I understand it, signal confirmation that it's going higher. So I'd look for a close above, let's see, above 90 cents. If we get one close above 90 cents, look for a secondary close above that new high as far as this next move up. And then, what would look really great is a close above 96. But right now we're not seeing that. We're seeing a pullback consolidation. So that to me seems like this is a premature bear flag. These wicks to the downside do give me some confidence that the 382 at 82.63 cents is holding. So I'd look for no closes below that level. And that, does give you some more wiggle room. And I believe I was saying like 84 cents. So 82.63 cents. No closes below that. If we get a close below that, it suggests weakness. Then we're going to start to see closes below these lows, and it's going to retrace to the golden pocket. So, or maybe the 786. That's like rounding to the nearest penny. That's 69 cents. So have fun with that. So I'm going to say I think it's going to 69. But if it closes above 90, I think that there's potential to wait for confirmation and then it's going higher. So I'll leave it at that. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thank you so much for watching and for the request. Hope this was a fun way for me to do a video for you guys. Take care.